Okay, so we are live. Let's have a check if you can see all of this. No, maybe because it's not public. Let's here in public maybe public. Okay, so can you hear me? So the beginning it will start at 1 minute and 36 seconds. Let's share. Here you have. So I will mark with a black pencil. Here is the net income, and here is balance sheet. And both of these are given data, and this is question, and with the, let's say, light blue, these are answer. Okay, so as you can see, this is a net income statement, and this is balance sheet. Orange color, this one is an asset, and the light green is credit. Okay. Actually, it's liability. It's liability and capital liability. Okay, so let's explain here. If you remember, here is the asset. It will be, okay, so asset will be, let's say, asset, orange color. If you remember, in balance sheet, it will be plus here and minus here. In debit will be plus, in credit would be minus balance sheet for the asset. For the liability, credit is plus and the debit is minus for the balance sheet. That cash flow is different. Cash flow for the asset, if the asset is rising in current year, you will put a minus there. If the asset is falling in the current year, comparing to previous year, it will be plus. But liability stays the same for the cash flow. If it's rising for this current year, it will be plus. If it's falling down, it will stay minus, 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 plus, plus. So the liability is same, but asset is different in the cash flow. And we will explain why. So these are the questions. And here we have our cash flow. So let's begin. For example, net sales. Net sales 980,000. We have here variation in accounts receivable. We can find it here, accounts receivable. The difference between these 2 years, let's have a check. So in 2022 current year, it's 112 minus 85. So the difference is 27, as you can see, and we will explain why is this negative. It's negative because in the current year, it's rising. So it's negative. Let's have a check once again. Okay, so this is rising and its asset is rising, and in cash flow, that means it's negative. And we will explain why, of course, to be more, to have more sense and logic for you. So these are actually accounts receivable, but not received. There is no cash. There is no cash. This 27. So we account on this. We count on this, but we haven't received. And cash flow is all about cash inflow and outflow. But here there is no cash. We haven't received payment yet. And that's why it's minus from the cash flow. Okay, and this is cash flow, real cash flow from the customers. 980,000 minus 27,000. Okay, COGS is cost of the goods sold, and cost is similar to expense and always will be minus because we have to pay something. Yeah. Inventory variation, it's an asset. Inventory variation, here is inventory, it's rising, and according to our funnel, when it's rising, it's negative. Rising, negative. So why is this negative? Inventory was in previous year less. Now we have more inventories, which means we produced or both, or we have bought more inventories, like we bought, so we had to pay with the cash. Yeah, we had to pay with the cash. We bought more material, we bought more, for example, inventory. It can be we bought more goods, not goods, actually. Yeah, goods. Yes, goods. So we bought more things and the money is gone. That's why it's negative. Accounts payable variation, this is liability. Liability because it's payable. We haven't paid this yet, so let's find accounts payable, we said for the, let's take the green one, we said liability stays the same. So it's rising in the current year and it's plus. Let's have a check. Is it plus this difference? Of course, yes, it's plus. It's not negative. Why? We will explain why. Because we had to pay, we had liability 110 in previous year, but now we have to pay even more, but we didn't. So the cash stays in the company, and that's why it's plus. It's not paid yet. Okay, and so these are actually payment for purchases. COGS, cost of goods sold, we had to buy many materials in order to, and goods in order to sell these goods. Yeah. Inventory variation, we had to buy more inventory, so it was expensive. Yeah, we were spending money. Accounts payable variation, of course, it's payable because we ordered something and didn't pay for that yet. So these are all purchases. Okay, so operating expenses are actually, let me check in the net income, operating expenses are general and administration expenditure. General and administration expenditures, it's here. And of course, expense minus its negative, the word itself saying this. Prepaid expenses, so it's paid in advance. Prepaid expenses here, and prepaid expenses, it's not negative, but it's set. This is accrued payment. So if it's rising, it's negative. Rising, negative. Other accrued expenses payable. So of course payable is here. It's falling down and it's negative also. Okay. Taxes are in net income. Variation in taxes payable, of course here payable because these are liabilities. Payable, taxes payable, it's less, so it's negative. Taxes payable, negative. And here is total payment for taxes. Operating activities is very close to basic business. Variation in marketable securities. Its asset, it grows, and it's negative. Okay. Asset, it grows, it's negative in cash flow. So don't mix, please, balance sheet and financial accounting with the cash flow. It's not the same. Okay, purchases and sales, so this is the same. Variation in plant assets. Plant, this is here, fixed assets, plant, factories, yeah, all of these are fixed assets. And here is the difference, because it's growing, it will be negative because it's asset. Why it will be negative? Because we bought just plant for 620, but in this year we bought more factories or we invest in factory, and of course we gave money for this. So that's why it's negative, because our cash flow suffers for this. Yeah. LT, long-term loan for buying the fixed assets. So long-term loan for buying the fixed, it's growing, it's liability, and it's plus. It's plus. So you can see it's quite easy. So this is here. The variation in bond issuances, bonds here. It's rising and it's plus. It's rising and it's plus. For the liability, you can have check here, of course, rising and it's plus for the liability. Okay, and variation in capital stock. Capital stock, it was 15 and stayed 15. The difference is 0. Nothing happened. And you can see we have operating activities, investing activities, financing activities, total cash flow. So let's have a check. Operating 117,500 minus 52 plus 54. It's of course net cash flow. Okay, and let's have a check. Okay, so this is the relation between the statement cash flow and the balance sheet. Cash, and it's some kind of control or test if you have done everything well. So cash balance at the end of previous year. Cash and niche care cash end of previous year 48,000. Total cash turned by the firm for this year turned because it's in a positive state. It's plus. Okay, and cash balance at the end of, so here 2020. So you will get, let me have a check. Where is my calculator? Calculator? No. Where is it? Calculator. Okay. Okay, so we have 48 at the beginning plus 111,500 and it's 167,500. So it's correct. You imagine here, you didn't spend all of this, so you bought or you bring both this from previous year into this year. Okay, and this is also a test. So net income. You take from here net income, and here you will put from your cash flow. From your cash flow, you put everything here that doesn't have anything with the net income, just from balance sheet. So let's explain. So let's explain here. Does it has something with the net income? No, because it's accounts receivable and it's asset, so we will put it here. Okay, does it have costs something with net income? Yes, it's here in net income, so it cannot be here. Okay, let's go further. Inventory, it's an asset, so balance sheet, we will put it here. accounts payable, it's a liability, it's a balance sheet, and we will put it here. Okay, prepaid expenses, it's an asset, we will put it here. Other accrued expense payable, it's liability, and we will put here. Okay, interest expense, we will not put in here because it belongs to net income statement. Okay, taxes, net income statement, we will not put here in the test. Variations in taxes, payable liability, we will put here. Okay, so let's have a check. Okay, and all of this we got operating activities. So let's have a check. Operating activities, correct. And this is net income from balance sheet, cash flow, from cash flow actually, but belongs to balance sheet. Okay, so hopefully this was helpful. Okay, thank you for watching. You can always find me on email and ask for maybe some personal lessons too. And you can ask me anything you like or anything that I didn't mention here. Thank you. Have a great life. Bye bye.